If we are talking about the application of AI, so with capital markets, it's very clear we have a very strong tool, like the advisor in the bank. We call it, we have a junior analyst that is never sick and never wants to work from home. The question to you, Pedro, is are you applying already AI while constructing a venture capital portfolio?
So first of all, thank you for hosting me. It's a pleasure to be here. It's my first week in Israel. It's a special week, and
Very
unusual week, right? Unusual week, and but I'm pleased to be here, and I'm a big believer on technology, right? And Ilan, you were translating some of the panels. I really believe that intelligence here is to stay and is to empower humans. So I think the future is artificial intelligence helping humans have a better decision, right? And if there are people here that are not so familiar with artificial intelligence, you know, the first book that I read that is very good, it's called Superpower, China and Silicon Valley, The Age of the Artificial Intelligence. I recommend this book because it's something that's changing the landscape and it will continue to change, right? On your question, I think it's important to segment that on a public market, there's more data, it's more structure, it's easier. I invest in private companies. So the data is structured, but nevertheless, at L4, we are looking for ways and seeing benchmarks of how funds are working with data to improve their decision abilities. And there are already some data that helps you to go through the website of different companies and crawl the data and look for indications that can shortlist. Because you know, we are just 1 year since we launched. We have already received 400 options of investment. And we are only able to do first meeting with 25% of the targets. I'm in Israel this week. I'm eager to meet, you know, entrepreneurs, but it's impossible. So the more the intelligence can help you to arrive at better decisions, I think it will improve, and it's something that I'm looking forward to use. But again, I think it's easier to structure the data and analyze in a public market than it is in a private one.
So basically, yes, that we're seeing on the public markets, they're very structured data sets. And basically, at the beginning, we are already starting to see application where the challenge is a bit bigger on your private side of the things. Maybe another question on challenge, given that you are coming from Brazil, it's true that you are scouting for investments on a global basis, but do you see a clear difference between the data sets that you have in the developed markets versus what you have in emerging and in Brazil specifically?
Yes. So that's part of the reason why we look for artificial intelligence and more deep tech in countries like Israel, because the first thing that we have to point out on emerging economies versus developed ones is that we simply still don't have the talent, which is very important, right? If you look at Brazil, it's not only about the data, but we simply don't have enough engineers and enough developers that are already working and started and trying and improving, right? In artificial intelligence, there's a lot of humans teaching the machine to go through the data, right or wrong, the data gets smarter and so on. And because we don't have enough talent, this is a market that's not so developed in Brazil. And also, the companies have not yet found the value of data. If you look at B3, they have done so many interesting acquisition on the data space, like other stock exchanges have done in the world, because they understand the value of data. And I see that, you know, maybe I'm being a bit bearish on emerging markets, but there's a big opportunity. And I think especially for companies on more developed markets or markets where there's a lot of talent like Israel, to go and apply the technology that is developed in different countries to Brazil. And with time, we hope that Brazilian companies will catch up and learn, because, like I said in the beginning, you know, it's the future. There's no coming back from this.
Thanks. Basically, going back, staying in Brazil, where we are laughing every time we go to Brazil. We say there are a lot of similarities between Brazil and Israel, but the numbers are a little bit different with the 200 million population. But basically, what we've seen in the past few years in Brazil is what we've seen globally, but on steroids. Basically, retail investors went from 300,000 to 6 million in 5 years because of technology and because of open investment platforms. So we've seen this massive boom, but it is still very low. What are the opportunities that you see for fintechs and for VCs like yourselves in this big boom?
So first of all, there is a lot of similarities as well, right? So we are here at the Tel Aviv Stock Exchange, which is a demutualization like the B3, maybe more recent one. And if we look at the market as a whole, there's a lot of similarities as you just described. And you're right with the numbers. We went from 300,000 investors to 6 million. And how we did, and you know, like there's 220 million people living in Brazil, so there's still a lot of room to grow. And if you ask me what was the first thing that helped with this boom, it's actually the people that are in this room here in the Brazilian industry. You know, brokers, capital markets people, they made a lot of advancements in the industry, teaching people where they could invest, how they could invest. And I think someone said that, you know, the future is human plus technology. Yeah. There are lots of people that they're not only the data, they have to have someone holding their hands and explaining, at least in the beginning. So there's a lot of education that is needed for the market and for Brazil specifically, right? And another change that we have been seeing in Brazil is that if you see the average ticket of an investment, it used to be around $1,000, but now it's closer to $100. So you see a lot of mentality of like younger generations that they can save something and start investing. And it's not something that people that can invest are only the sophisticated, the people, you know, wearing blazers and so on. You see more and more democratization of the investment world, which I think is very important. And then if you're gonna look at what is the future, I already see startups in the United States that they are rounding up. So people don't have the culture of saving. They go for a Starbucks, they buy a coffee that costs, you know, $3.50. The credit card charges $4, and the 50 cents already gets invested in an ETF fund, right? So you see more technology, and you see more and more people helping the society to invest better, and I think that's going to be very good for Brazil. So there's a lot of room that has already been passed, but there's a lot of room for improvement as well.
Just to share an interesting statistic here, so even after this massive growth that we've seen, only 5% of the retail investors in Brazil are exposed to equities, while 10% are exposed to crypto. So basically, there is a lot of room for growth and education. And maybe the last thing to add is with the platform is becoming way more with the ability to remove barriers and to invest abroad, we are seeing more and more interest in international equities. Some of them are actually listed in the local stock exchange, like we have the dual listing. But that's another thing that the retail investor brings. If the institutional investor is sometimes locked on the local benchmark, the retail investor, also from the things he's consuming, like Amazon, Tesla, then we see more and more interest on international equities on one hand. On the other hand, still a very low knowledge of English in the population.
That's true, and you know, Brazil has a huge history with inflation, right? So we're an inflationary country. Some of the people that are bullish on the country right now is that the world is going through an inflationary period, and Brazil has actually cracked inflation in the past, right? So this is people that are more excited to invest in Brazil. But the reality that if you look at my father, where he used to invest, is all real estate, right? There was not options to invest back then. And then our generation started investing in equities, at least, you know, the people from the financial centers and so on. But usually like companies in Brazil. And you know, if you think about not my children, but you know, the people that are graduating for today, they are already building portfolios in the United States, in China, Israel, because it's getting more and more easy to invest globally. with products such as BDRs. There are startups in Brazil that helps you take the money outside and invest outside. So with all this complexity, the need for data, for studies, and for more financial education is huge, right? And if you think the younger generation, they want to, if there are ESG defenders, maybe they just like Tesla versus other cars, and they want to learn more, but sometimes they don't speak English, right? And you don't have reports written in English for the average Brazilian. So that's where technology kicks in, right? The ability for you to teach and to learn. And our brain, we're talking about investment word, right? I'm a big fan of Warren Buffett, that it's a living proof of compounding rates, right? And our brain works the same. The earlier you start to learn, the better you keep following up. So it's very important that we offer the broader population the ability to learn and to reach for companies in Brazil from outside as the world gets more complex and more opportunities to invest arise.
Great. So another question with also showing how special Brazil is. So if we are saying that in Israel the rate went up, in Brazil it's 14% today. Exactly. So I will say, my question is the following. So if we're looking at the local rates at 14%, coupled with what we are seeing globally, let's say with Credit Suisse and the collapse of Silicon Valley Bank, what do you see as a VC investor, both on the ability of liquidity conditions and any changes in terms of preference for both the investors and the entrepreneurs seeking an investment?
Well, I have a $120 million fund, so I think this is the 120 million question, right? And so there is no way to deny that the higher interest rates make it more difficult and challenging for you to invest in, younger companies. And the reason is just mathematics, right? If you have a company that the profits is just down the road and you have higher interest rate, your opportunity cost increases, right? So therefore, the valuation gets a bit lower. I don't want to get too much into technical here, but there has been a change in the sector. What I believe is that on the optimistic side, there has never been so much talent, and it has never been so easy and cheap to build new companies. If we think about, cloud solutions, and talent, and the chance for founders to micro hire small companies to just offer like a new solution, and the problems that humanity is facing are still very big, right? So I think it's a great time to start a company, and I think it's easier for the industry to invest in earlier stages, right? So companies that are recent and are tackling like significant problems. Because those won't change the world tomorrow. We're building companies for the next 5 years, 10 years, and those companies, they won't suffer for different high interest rates or long interest rates because they're tackling very big problems and important problems to solve. On the other hand, for companies that are unicorns or that got really big rounds and big valuations in, let's say, 2021, where interest rates were close to zero and there was a lot of free money in the market, those will have to adjust. Because if what we see what happened in the public markets, we have seen a lot of decline in valuation of companies that are growth or tech-oriented. And when I'm talking to founders that got the $1 billion or multi-billion dollars valuations, some of them haven't adjusted because there's a lot of things, stock options and things that happen within the team that they are, postponing a correction that it's going to be important, right? If valuations have changed across everything, I would recommend founders to realize this change, readapt, their market value and so on, keep building the solutions that the world really needs, right? So I think that there's still a lot of excitement, right? I'm a big believer on, again, Warren Buffett quote, that we have to be greedy when others are fearful, and we have to be fearful when others are greedy. But that's always easier said than done, right? Usually when the market is collapsing, people sometimes tend to panic and say it's not the right time to invest, when the opposite is true, right? Maybe those are the times that are the best ones. And if you look at my industry, venture capital or private equity, there's a lot of correlation of returns based on the vintages of the funds. Meaning, if you are a fund that was investing when interest rates were close to zero and you got really high valuations, it will be very hard for you to offer returns. If you are a fund that are investing in challenging times where the valuations are lower, maybe you have the opportunity to make better investments. So I think all in all, it is a moment that for founders, they have to be cautious. They have to look at cash flows. They have to really think about which are the problems that they're solving and keep building the companies. For investors, a moment to, you have more time to talk and understand. In 2021, it was very hard to invest because everyone was raising new rounds. There was a lot of excitement. So I think overall, the macro changed, but it's still a very good moment to invest in winning companies. And that's why I'm here and excited to look and meet entrepreneurs and see the companies that will continue to shape our industry in the years to come.
Just to add on that, also in Brazil, as in Israel, as was discussed in the previous panel, the banking industry is very different to Europe. We are talking about very healthy banking industry, the likes of Itaú, Bradesco, with the very strong balance sheets and heavy regulation, a bit like the Israeli banks, that we are all survivors of hyperinflation. It turns a counterintuitive phenomena that emerging market banks are way stronger than developed market banks today. So that's another phenomena that the liquidity in the system in Brazil is very good.
Yeah, and I think if we're talking about the banking system, there's no way to go around what's going on with Silicon Valley Bank and different banks. We in Brazil have a very healthy bank industry. In the past, there were many people that would complain there's a big concentration of the largest 5 banks. But it's incredible how many changes Brazil has undergone recently. The central bank launched something that is called PIX, right? So everyone here is probably familiar with what's going on in China, where you can buy things with QR codes and you do instant payments. Brazil has that now. Yeah. So you see QR codes, instant payments, like no cost to users. And those revolutions launched by the central bank was in partly facilitated with the concentration of the banks. And like I talked about inflation and so on, the tough things that we had very challenging times in the last decades. But on the banking system, that worked to improve the system, right? How do you deal with an economy that is so high inflation? And so we're good with the banking system in Brazil. The central bank in Brazil is doing a lot of good changes. Again, talking about the era that we're living in, where technology can really make the difference. And if you think me on the other hand, right, what's my opinion? It's very hard to analyze, right? I'm not a banking expert. But the reality is that what happened with some of these regional banks in the United States, it's something that you might stop and think, was this irrational? Was this fear, like people withdrawing money? And the reality is that it wasn't irrational. If you think about game theory, if you have the chance to just withdraw your money, and that costs you nothing, and then you save the whole money that you have. On the other hand, if you don't trust the bank, you have the chance to leave the money there and you lose everything. The game theory solution is that if there is a crisis or a lack of trust, people will simply change. And not again getting into all the details what happened, but most of the banks, they had a long position in a world that the interest rate was 1% and the Fed changed it to 5%. And then if you don't keep those long investments, you have to realize a loss. And that's what happened with the Silicon Valley Bank. A lot of discussion if the local regulators should have helped or not. My personal opinion, I'm not an expert, it was very important Otherwise, all the flow would leave, and not only the Silicon Valley Bank, but it's the regional bank crisis. Because if you can't trust the deposits, everyone's going to go for the JP Morgans, Merrill Lynch, Citibanks of the world, and there would be a run against all the regional banks in the United States. So, you know, it's hard to analyze because we're in the middle of what's going on. But hopefully this will get sorted. I think that the decision of insuring deposit was the right one. I'm an investor, and I have a hard time looking at the balance sheet and understanding exactly what's happening. And I think that if you are a user, and you're going to just leave your deposits there, you expect the bank to honor that. So it's very hard for an average user to understand the exposition of long term and so. So I think it was a right decision, and hopefully this will get sorted out because I do think that having regional banks in large economies is important. You know, regional banks are usually closer to clients. They understand their communities. They have long-term relationships with their users. And I think it's important. Like the large banks are important, the regional banks are important. I think it's such an important industry as a whole, and hopefully this will get sorted, and we'll have a more stable world going forward.
Very good. Do we have any time for? No, we don't. They did this to me, so no time for Q&A. Thank you very much. Thank you, Pedro.
Thank you. It was a pleasure.